How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on gold versus the US dollar. We're going to start off with the DXY first. Like we said in the previous episodes, we were expecting some type of pullback after we got this liquidity void to the downside. We could see this last down close candle was the catalyst. We can see how price runs through it, comes back into it, respects it, and it runs away. So this was a bullish order block. We can see price is still filling in this liquidity void. I said that in the chat today. I still expect dollar to fill this back in, which means gold should continue to go lower. So if we look at gold, ever since we got those clean highs rated, we got up to 1980, we got a breakdown and we're going lower. I think price is most likely going to target this swing low. That was according to the bullish trend being the higher swing low. I think this swing low is going to be rated in the near future. So we're going to get back down to 1950. And if price is going to finish this week bearish, it should possibly get down to 1920 and then even try to reach back down to the opening price for July as well. Now, there was a New York model setup that occurred today, and I just want to walk through that because some people in the chat was a little confused about how it would go, and I'm going to walk you through the process today. So what you see here is 5 a.m. to 7 a.m., and we're going to bring it all the way back. Now, there is annotations on the chart, but as we go through, you're going to see why these annotations are important. So this is the London lunch. This is 5 to 7 a.m. That's just before New York Open. We're going to use this area as our catalyst or sponsorship to the next session's direction. So if the market creates a high here, a swing low here, and a swing low here, we're just framing some type of idea around it. Now, could you be using daily bias with this? Yes, you can. But ultimately, I don't really use daily bias. I just take one side and then trade it to the other side. So if it purges, let's say for instance, if it purges sell side, I'm going to look for some type of setup to go back to revert to buy side. If it purges buy side, I'm going to look for the market makers to revert back down to sell side. That's all I'm doing here. It's the same thing as the Asian session model, the same thing for the London session model. Does this mean it's going to happen every single day 100%? No. But there is a consistent pattern and framework around it. Now, if you're looking for one model and you have time available during your life schedule to trade something, I recommend you looking at the New York model this way. So we have that high here on the 15-minute time frame. You have that swing low here and this low here. So that's where we're going to be using our liquidity. Why we're not using this high? Because it's already broken here on that 7 a.m. candle. Once it finishes forming, that candle here on the 15-minute candle right here. We go down to the 1 minute. When we play it forward and we want to see the high or low broken. So if we play it forward, we see nothing's broken. You have the opening price for the New York session here. You have that premium and discount ideology. Anytime price is in a premium, ideal sell scenario. Anytime price is in discount, ideal buy scenario, depending on the catalyst and what's going to occur. Here, right there, we break that 15-minute high. At that point, I go down to the 1 minute time frame, and I'm just looking for the first fair value gap that I see that forms in the price action. Play it forward. There is that first fair value gap. Should be drawn like this. There we go. We got our first fair value gap. That's the opportunity where I'm trying to go short. So that's that 15-minute right there. High. Within that 15-minute candle, that was the highest point the candle went to before right here. See, that's 7:15 here. So that's the highest point that 15-minute candle was. It broke that. Once it broke that candle, I wait for the first fair value gap here. Many people were saying, why did you not take this one or this one or this one? Because there was nothing broken on the 15-minute time frame. Nothing was broken. It was until here, around like 7, right here. See, 7:37. It broke that 15-minute high candle. Then we got that first fair value gap. Then I look to go short inside of it. Now you can see how price runs all the way down. Right? It looks like it doesn't give anybody opportunity. But if you have patience and you wait for the price action to come back to your area that you want to sell at, there goes the short. Yes, you do endorse some drawdown, but that's when you would use, a certain amount of risk. And there you go. I'm going to pause it right at 7. Got pretty close. And look at how it goes from buy side all the way back down to sell side. Can't be random because I've shown this so many times already, especially with gold. I prefer this model with gold. That doesn't mean it doesn't happen in other pairs, but I think for trading gold, I think it's a really solid model for those that really want to capitalize on trading this currency pair. I say use the New York model the way I use it here. I do have a video on the channel as well that explains this, but generally you'll see that the setup is going to form either in a premium or discount. If it's going to sell, ideal sell scenario, you can see where is it coming from. Premium, it goes above the open, comes back down again, up, down, up, finally takes off. Where does it reach for? Perfectly this low. And then if we play it out to where price is currently, so now that's 10. You're going into London close. You might have a small reversal opportunity to catch, 10, 15 pips. And as you can see, price continued to trade sideways for a bit after 12 p.m., the dead zone. But that doesn't mean it can't continue trending. So if you still have a position here, right, or trailing stop, and you haven't been stopped out, you can still hold. How else do you think swing traders are able to hold for a couple days, couple weeks, and couple months? They are able to find an entry point and they hold. And that's where we are currently in the price action right now. So if we go back to the daily, I still want to see potentially 1950 hit before the end of the month. And then potentially maybe this swing low here again. So we get back inside this busy buy side imbalance, sell side inefficiency. That's what I see price doing right now. As you go to the next month, we'll re-speculate and talk about, higher time frame projections. But as of right now, what I'm viewing on the daily chart, I see price has purged, reverted, and now it's looking to go short. If we take you back to that 1 hour setup, the ATM method by ICT, we can see that fair value gap right here runs that swing low. That's the shift, the market structure shift here. Sell there. That was the Asian sell opportunity that we were talking about in the previous episode. Price continued to break down, and that's where we are currently. We still have those sell side liquidities below these swing lows here, clean lows. Anybody that's using a phantom trend line, it's getting completely wiped out. So the same thing is repeating constantly. You can see here on the 1 hour, there goes the speed with the fair value gap running through what? That swing low. So there goes another shift. Price is still continuing the trend to go lower. Now, does that mean you have to wait to sell as soon as it touches it? No, you want to wait for a kill zone. Whether that's the Asian session, London, or New York, wait for price to get back into the zone during those time periods. And if it's still within this region, try and find a sell opportunity there. And still follow the model as in the New York, London, and Asian that I speak about. I think it's really consistent and helps any level trader find profit. Like I said, it's not guaranteed. It's not 100%, but we're still expecting gold to break down, probably getting back down to 1845 here. So hopefully this was insightful. Peace.